Hi, this is Craig, and in this video I'm just going to talk a little bit about the Fibonacci retracements and how to draw them and how to tell if a stock is strong or weak. Now what we're talking about this area, this reversal right in through here. Now if you draw in your Fibonacci retracements, let's say you run a scan and you don't know any of this is going to happen, but you run a scan, you see the stock has rallied and you've seen its pull back. Now you can see right here that this stock has broken out right through all of this congestion right here. So this breakout right here is pretty significant, and when you run your scans, if you see this, you see this first pullback after this breakout, this is something that you're going to want to pay attention to. So if we take our Fibonacci tool and we're going to start it right down here, and you can see that this stock has pulled back to right about the 38.2 retracement level. This stock has rallied from here all the way up to here, and it's pulled back only about 38.2%, which is what you want to see. If a stock pulls back more than, say, 50%, then it's signaling weakness. You don't want to mess with those stocks. But this stock has pulled back only about 38.2%. and it's got a nice candle here that's traded above the previous high, and see you got a really nice rally right here. So you want to keep in mind when you're looking at pullbacks, if it retraces more than 50%, that might give you a little bit of a a second thought there. You may not want to trade it, because you got to figure if the stock rallies from here to here and it pulls back all the way to here, you got to make, kind of makes you wonder, where the heck are all the buyers at? If the stock is strong, it will not pull back past this 50% retracement level. So you got this right here, really nice rally, and this would have been a fantastic trade right here. Now let's get rid of that, and I'm going to show you this right here. Now let's say you're in this stock and you're looking at this from here to here. Well, you can see, I'll go ahead and draw it in for you, but you can see that this stock has pulled back way more than 50%. And in fact, it's 100%. It's given up all the gains from here to here. All these gains have now been given up, and this stock has pulled back way more than 50%. And it does rally here, but you got to expect when you're looking at this that it's not going to get above this previous high up here, because it's a weak stock. It's pulled back more than 50%, pulled back all the way down here. So you would not expect this stock to actually have a decent rally and move beyond this high up here. It's just pulled back too far. So, and also you can tell, by this rally right here, that this stock is weak. I mean, you've got a spinning top here, a hanging man here, you got a couple dojis and another hanging man. So this is an extremely weak rally. So just because this stock has retraced way too much of this prior move leads you to believe that this ain't gonna last very long, and it didn't. It went down. So the bottom line is that when you're looking at retracements, you just want to find those stocks that haven't retraced more than 50% of the prior move. If it retraces more than that, it's just weak, and you want to stay out of it. And always look to the left on the chart. I mean, you may have consider buying it here, and it may have been an okay trade and everything, and it would have been fine to buy it. I mean, you've had all these consecutive down days, and all of a sudden there's this massive up day right here, nice piercing pattern. So you may have expected it to rally, but it's not going to do much in through here. I would avoid this. I probably would not have traded this, only because I know that this stock has retraced way more than 50% of the prior move. So just something to keep in mind when you're running your scans.